I'd like to welcome UBS Chief Economist Seth Carpenter. Spent a decade and a half at the Fed as well. Seth, trade deal done. That was one of the big, quote-unquote, uncertainties facing the market. Thoughts on the package? Is it too skinny? Is it too early to tell if it will develop into something good for the U.S. economy? Are there any Fed implications?
Yeah, I mean, I think clearly good is that there's not going to be further escalation in the near term. At least it doesn't seem so right now. I think what remains to be seen is, as Trade Rep Lighthizer said, the actual agreement is going to get signed only after, or the tariffs are going to come down only after the deal is signed, and that's probably in January. And so that means that there's a little bit of a ways to go still in ironing out some details. So for anybody who is hoping that all of the uncertainty would be resolved in one fell swoop, I think that still remains to be seen. From the Fed's perspective, they've clearly keyed off of what they see as the uncertainty and the risk from trade war getting worse as part of what kept them on hold. So this is probably going to make them just at the margin a little bit more confident about where things are going. So we'll have to see.
You know, but when we first started embarking on this road almost 2 years ago, there was thoughts and debates as to whether it would be disinflationary, inflationary. It turned out to be mostly disinflationary. And it would be hard for me to think that if the deal progresses farther from phase one and ultimately phase two, that process will also be disinflationary. Does that add up, that both permutations, both combinations put pressure downward on price?
Well, I think what's happened for the disinflationary pressures recently is that we've seen this big disruption in the industries that were hit at the end of last year, Q4 of last year, Q1 of this year. Manufacturing got hit. There were disruptions as people tried to deal with those tariffs. We're seeing the same thing happening now with those tariffs that came into effect in June of this year. We'll probably see some further disruptions to employment and retail as the September 1st tariffs keep going through. And remember, even with phase one, those don't get reduced until sometime probably in February. And so that's where the disinflationary pressure comes from, is a disruption to employment causing those affected workers to pull back on their spending. If we get phase one completed, get phase two, and as a result we see more free flow of goods, that could be disinflationary, but from a different perspective, which is to say less upward pressure on prices. But it should be good for employment, at least in terms of growth terms. On balance, though, the pricing side of things has been pretty small, and the real effect has been on employment and manufacturing. It's going to be employment and retail, and that's where the biggest effect is.